Assalamualaikum warahmatullahi taala wabarakatuh, and good evening to my name is Muhammad Taufikillah bin Nazamizi. My metric number is HFT20303. In our report, there are 5 sections. The first section is introduction.
Hello, my name is Atira Quantim. My metric number is H22A0.
Hi, Assalamualaikum. My name is Siti Nur Syafiqah binti Syamsuddin. My metric number is H22A0808. I would like to talk about company's background, which is Apollo Food Holdings Berhad and Guan Chong Berhad. I will start with Apollo's company first. Apollo Companies was an investment holding company located in Malaysia. It's called Apollo Food Holdings Berhad. The company is divided into 2 operating segments, which is investment holding and manufacturing, marketing and distribution. The company's main business is producing and selling layer cakes, chocolate confectionery items, and compound chocolates in international markets through its subsidiary Apollo Food Industries Sdn Berhad. Its main business is selling and distributing layer cakes, chocolate confectionery, and compound chocolates in the local market through its subsidiary Apollo Food Industries Sdn Berhad. The products of the company are mostly separated into 2 categories, which is Swiss roll products and layer cakes, chocolate layer cake, and chocolate wafer products. Malaysia and other international markets, including Singapore, Indonesia, Thailand, the Philippines, Vietnam, China and Hong Kong, Taiwan, Japan, India, the Middle East, Mauritius and Maldives are the distribution location for its products. Apollo Food Holdings Sdn Berhad was the name of the private limited company that was established on March 5, 1994. On September 8, 1994, the firm underwent a public listing and was listed in the consumer sector of Bursa Malaysia. The company is placed in the food and beverage sector. The company's main office is in Malaysia's Johor Bahru Lakin Industrial Estate. Apollo Food Holdings Berhad's wholly owned subsidiaries Apollo Food Industries Sdn Berhad, which manufactures and trades compound chocolates, chocolate confectionery products and cakes, and Apollo Food Industries Sdn Berhad, an investment holding company with an annual production capacity of 10,089 tons, are both incorporated in Malaysia. Keynote Capital Sdn Berhad is the corporation's ultimate holding company. It owns 51.3% of Apollo Food Holdings Berhad. As a result, Keynote Capital Sdn Berhad is the parent company of Apollo Food Holdings Berhad. Furthermore, Apollo's domestic sales, which account for 60% of overall sales, are mostly derived from 80 distributors around the nation. The majority of overseas sales go to the Middle East, Indochina, China, Hong Kong, Australia, Maldives, Southeast Asia, and the Indian Ocean Islands. About 50% of the local market is occupied by the corporation. Hi, Assalamualaikum.
Next, I will talk about Guan Chong Berhad's background. On March 22, 2004, Guan Chong Berhad was established as a public company in Malaysia. On April 8, 2005, the firm was listed on Bursa Malaysia's main market. The investment holding company GCB was founded with 3 subsidiaries and which makes EM, Guan Chong Trading into 2 operating segments, and Guan Chong Cocoa Manufacture, investment holding GCCM. The group's primary business is producing food products made from cocoa, such as cocoa powder, cake items, and compound chocolates in international markets in early 1980s, primarily with its involvement in the trade of cocoa beans. It began processing cocoa beans in 1983 and established a factory in Parit Jawa Muar, Johor. The management sold the Parit Jawa facility in 1990 with the goal of becoming the industry leader in the local cocoa processing sector. They then constructed a new plant under GCCM in the Pasir Gudang industrial area. After years of renovation and the spirit of continual improvement, GCCM increased the new plant's yearly capacity to 8,000 MT of bean grinding. The plant plant's initial capacity was 9,000 MT. Both the domestic and global markets accepted our cocoa products with great enthusiasm. By acquiring a 49% share in Carlisle Cocoa Co. LLC Delaware through its wholly owned subsidiary GCB America in 2006, the group took significant strides towards broadening its global reach and gaining direct market access into the United States. In addition, the consumer food segment, GCB Foods, is the vehicle through which the group's subsidiary has gone out to end customers by producing chocolate and chocolate beverage. GCB Foods began full-scale operation in 2007 following extensive work on the construction of its factory, the installation of equipment, and the creation of its recipes. The group created the brands Malco and Kakao Rich and raised awareness through innovative product development and marketing initiatives. Additionally, this business is heavily engaged in creating proprietary brands for hypermarkets. Next, I will talk.
Hi, Assalamualaikum. My name is Muhammad Taufikillah bin Nozamizi.
Assalamualaikum. My name is Siti Reda binti Ismail. My metric number is H22A0239. I will explain about activity ratio for Apollo Food Holding Berhad in 2021. First is total asset turnover. This ratio measures how efficiently a company utilities its total asset to generate sale. In this case, the total asset turnover ratio is 0.15, which means that for every 1 ringgit of total asset, Apollo Food Holding generate RM 0.56 in sale. Second is account receivable turnover. This ratio indicates how quickly a company collect payment from its customer. The account receivable turnover ratio for Apollo Food Holding is 5.45, which means that the company collect its account receivable approximately 5.55 times in a year. Third, average collection period. This ratio shows the average number of days it takes for a company to collect its account receivable. For Apollo Food Holdings, the average collection period is 66.94 days, indicating that it takes around 66.94 days for the company to collect payment from its customer on average. Fourth, inventory turnover. This ratio measures how efficiently a company manages its inventory. The inventory turnover ratio for Apollo Food Holdings is 9.29, suggesting that the company sells replenish its inventory approximately 9.29 times in a year. For the last one is fixed asset turnover. This ratio evaluates how efficiently a company utilizes its fixed asset to generate sale. The fixed asset turnover ratio for Apollo Food Holding is 1.36, indicating that for every 1 ringgit of fixed asset, the company generates RM 1.36 in sale. This activity ratio provides insight into how efficiently Apollo Food Holding utilizes its asset, manage its inventory, collection payment, and generate sale.
There are 3 categories of leverage debt ratio. The first one is LEP ratio, secondly debt to equity ratio, and thirdly is time interest earned ratio. The value of debt ratio is 0.09. The value of debt to equity ratio is 0.28. Meanwhile, the value of time interest earned ratio is 16.94. Profitability ratios for Apollo Food Holdings Berhad. Liquidity ratios for Apollo Food Holdings Berhad.
These are the activity ratio for Apollo Food Holding Berhad in 2022. First is total asset turnover. In this case, Apollo Food Holding Berhad has a ratio of 1.61, which means that for every 1 ringgit of asset is generate 61 cent in sale. Second, account receivable turnover. The ratio is 4.97, which means that the company collect in credit sale almost 5 times in a year. Third, average collection period. In this case, it takes Apollo Food Holding Berhad about 73.48 days to collect its receivable. For inventory turnover, the ratio is 7.18, which means that the company sells its inventory about 7 times a year. The last one is fixed asset turnover. In this case, Apollo Food Berhad has a ratio of 1.49, which means that for every 1 ringgit of fixed asset, it generates Rm 1.49 in sale.
In 2022, Apollo Food Holding Berhad continued to exhibit a strong financial position. The company debt ratio decreased to 0.07, indicating a further reduction in its reliance on debt to finance its assets. The debt-to-equity ratio also decreased to 0.20, reflecting a lower proportion of debt relative to equity in the company capital structure. Additionally, the time interest earned ratio remained healthy at 15.35, indicating the company's ability to comfortably cover its interest expenses. This figure signifies Apollo Food Holding Berhad continued financial stability and prudent management.
Return on equity ROE profitability ratios for Apollo Food. Next is Company B, which is Guan Berhad 2021.
These are the activity ratio for Guan Berhad in 2021. The first one is total asset turnover. The ratio is 1.02, which means that for every 1 ringgit of asset, Guan Berhad generate Rm 1.02 in sale. Second, account receivable turnover. The ratio is 8.28, which means that Guan Berhad collects its credit sale about 8 times a year. Third, average collection period. In this case, it's taken Guan Berhad about 44.07 days to collect its receivable. For inventory turnover, the ratio is 1.90, which means that Guan Berhad sells its inventory about 2 times a year. And for the last one is fixed asset turnover. In this case, Guan Berhad has a ratio of 3.33, which means that for every 1 ringgit of fixed asset, it generates Rm 3.33 in sale.
Debt ratio value of Guan Berhad 2021 leverage debt ratio value is 0.62. Second, debt to equity ratio value of Guan Berhad by 2021 is 0.87, which is lesser than debt ratio of Guan Berhad in 2021. Last but not least is time interest earned ratio. Time interest earned ratio of Guan Berhad 2021 value is 883.05.
Guan Berhad produced a return on equity of 0.11 in 2021, meaning that for each equity unit invested, the business made a profit of 0.11. The company's return on assets was 0.04, that is, for each unit of assets used, it produced a return of 0.04. Guan Berhad kept 0.10 of every sale after deducting the cost of products sold for a gross profit margin of 0.10. With an operational profit margin of 0.08, the business made an operating profit of 0.08 for each ringgit of sales. Last but not least, Guan Berhad kept 0.04 of every ringgit in sales as net profit after all costs were subtracted, or a net profit margin of 0.04. These ratios shed light on how profitably and effectively the business uses its resources. Guan
Current ratio for Guan Berhad 2022 is.
These are the activity ratio for Guan Berhad in 2022. First is total asset turnover. In this case, the total asset turnover ratio is 1.10, which means that for every 1 ringgit of total asset, Guan Berhad generate RM 1.10 in sale. Second, account receivable turnover. The account receivable turnover ratio for Guan Berhad is 6.47, which means that the company collect its account receivable approximately 6.47 times in a year. Third, average collection period. For Guan Berhad, the average collection period is 56.41 days, indicating that it takes around 56.41 days for the company to collect payments from its customer on average. Fourth, inventory turnover. The inventory turnover ratio for Guan Berhad is 2.54, suggesting that the company sell and replenish its inventory exponentially 2.54 times in a year. And for the last one is fixed asset turnover. The fixed asset turnover ratio for Guan Berhad is 3.09, indicating that for every 1 ringgit of fixed asset, the company generate RM 3.09 in sale.
In 2022, Guan Berhad maintained a moderate level of debt with a debt ratio of 0.55, indicating a reasonable proportion of debt relative to its asset. The debt to equity ratio stood at 0.64, suggesting that the company relied more on debt financing than equity. Furthermore, the time interest earned ratio of 757.79 showcase the company's robust ability to cover its interest expenses. Despite the slightly higher debt level compared to the previous year, Guan Berhad demonstrated a strong capacity to meet its interest obligation. It's important to consider the overall financing health and risk management strategy of the company in evaluating its performance.
Guan Berhad produced a return on equity of 0.10 in 2022, meaning that for each equity unit invested, the business made a profit of 0.10. The company's return on assets was 0.04, that is, for each unit of assets used, it produced a return of 0.04. Guan Berhad kept 0.09 of every sale after deducting the cost of products sold for a gross profit margin of 0.09. With an operational profit margin of 0.09, the business made an operating profit of 0.09 for each ringgit of sales. Last but not least, Guan Berhad kept 0.04 of every ringgit in sales as net profit after all costs were subtracted, or a net profit margin of 0.04. These statistics shed light on how profitable and effectively the business will use its resources in 2022. Guan Berhad produced
Comparative liquidity ratio for Company A and B in year 2021. Company A has a higher ratio reflecting the ability to pay each short-term obligation on time. Company A also has a higher ratio reflecting the ability each short-term obligation without relying on inventories. Company B has a higher positive value and absolute measure in liquidity. In this slide, we can see that comparative activity ratio for Company A and B in year 2021. Majority, we can see that Company B has a higher ratio than Company A. This slide showed a comparative debt ratio for Company A and B in year 2021. Totally, we can see that Company B has a higher ratio than Company A. For comparative profitability ratio, we can see that majority Company A has a higher ratio than Company B. For comparative liquidity ratio for Company A and B in year 2022, we can see that Company A majority has a higher ratio than Company B, same as previous year. In activity ratio also same as previous year, which is Company B has majority higher ratio than Company A. Other than that, debt ratio also same as previous year, which is Company B has a higher ratio than Company A. Last but not least, profitability ratio. We can see that majority Company A has a higher ratio than Company B, but for return on asset, Company A and B has the same ratio, indicates the same return on the firm investment.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad.
For the last one is 5.0 conclusion. The conclusion is Guan Berhad demonstrate a stronger financial structure with higher inventory turnover, consistent gross profit margin, and balanced debt ratio compared to Apollo Food Holding Berhad. This make Guan Berhad an attractive investment option and reflect its financial stability and effective management. The comparison highlight the significance of efficient inventory management, cost control, and balanced financing for achieving financial stability and growth. Ultimately, a company with a sound financial system and accurate forecast is more likely to success in the long run, navigate market fluctuation, compete effectively, and attract investors. The gross profit margin ratio is a key indicator of a company's financial stability, showing the proportion of revenue retained as gross profit.
That's all from our group for this presentation. Thank you.